A subscriber reached out and asked me to take a look at Assertio Holdings. So that's what we're doing today, taking a look at ASRT stock to see what it could be worth, where it could be headed, and what my personal take is. So we're going to look into some of the fundamentals and see how the business is doing and why it may have fallen roughly 98% in the last 10 years and 99% from its all-time high. We can see here the company currently operates at a loss. They have a market cap of 94 million and an enterprise value of 53 million. If you don't know what Assertio is, read this description. When it comes to their cash to debt, they have 2 times their debts in cash. In their profitability, we can see that versus the industry, they have solid gross margins as well as free cash flow, but the rest are mediocre or pretty subpar. Versus the company's historical performance, lots of red, lots of yellow, so some of the worst numbers they've achieved in the last 10 years, but there is some potential undervalued opportunity, so we'll have to look into that. Not having a PE means there's a couple other ways we can try and value if this business is cheap or expensive based on what they earn. And we can see that the PE without NRI is 19.9, right around that median, but the price to sales ratio is 0.58, just about the lowest. Looking at their financials on an annual basis, we can see that revenues are definitely not up and to the right. They did pretty well here for a while, and then had some negative margins, recovered, negative margins, but that revenue is very sporadic, and most recently, big drawdown with huge losses. But getting a closer look with trailing 12 month, we can see that the revenues are a little bit flatter, became positive here, and then fell into some serious losses. But looking at the cash to debt ratio, they do have more cash than they have debts. But the thing that surprises me here, or even concerns me, is if they were to have to pay down their debts, they would have 41 million left over. And in their most recent trailing 12 months, they've lost 333 million. So this tells me they're going to have to sell something or increase the margins or do something so that they can stay above water. And that means they're going to be selling shares. So when you sell shares, it's going to decrease the value of every other share because you're increasing the quantity. So not exactly what I want to see as a long-term investor, but if you do hold different types of investing styles, maybe you're an options trader and a 6% change in price can result in a larger gain for you. But for me personally, this is a big red flag. Selling a lot of shares. Debt is, not in a terrible position, but they're losing a lot of money. When I look at a company with revenue like this and margins like this, to me as an investor, it makes me think, why would I put faith in a company like this? Imagine it's a sailboat on the ocean. You got some holes popping up in the hull. Maybe you patch them here and there, but it's going to be a rough time on the sea. I'd rather see revenue up and to the right. I'd rather see those margins being dominant, because if your margins deteriorate, it shows that you're losing business somewhere, whether it's competitors or your products are just not good enough. This is not necessarily what I want to see. It could become a recovery. I think that's what the subscriber is more so looking into, if it's got a potential to double or triple from here. And this valuation does give some insight that it could be worth double or even more. But let's check out the DCF. So we have low business predictability because of that volatility with the earnings. There's no data on the 10, 5, or 3 for earnings per share. But for free cash flow, there has been serious growth in the last 3 years. Although if we zoom out, again, we see that volatility where it can grow really fast, decline really fast, become negative, and then bounce around. So if you're comfortable with volatility, you're an experienced options trader, this could be a little bit more interesting for you. This is not my area of expertise. I'm a long-term investor. I want to buy and hold winners. I view this more as, if you're going to be buying this, it's a cigar butt type situation where you think you can get a couple puffs out of it and it might double or triple in the next year or something, but it's not exactly what I'm looking for. I'm looking for something that's going to grow over 10 years and not be very volatile. So to me, it doesn't necessarily look like it's an outstanding winner. It doesn't look like it needs to be worth more, because a business with negative margins is it's not worth anything if you're losing money. But I don't know what his plan is. Maybe he plans on shorting or putting a call option, and that could work out well because volatility is the friend of an options trader. But for me personally, ASRT looks like something I would stay far away from. It's a pharmaceutical company, so I generally stay away from the biotech sector because it comes with a lot of shock and awe. There's a lot of drawdowns, a lot of spikes, a lot of big swings, depending all on whether the FDA approves or disapproves their products. If something comes out and there's news tomorrow, it could shoot up 200%, or it could continue downwards. But based on the fundamentals, there's no reason that it has to be worth more. I see a lot of red, and I really don't like looking at revenues and margins in this manner. But that's my input. I have a very different style of investing than probably most people, but I really want to minimize my risk, and I want to buy things that scream at me that I need to buy them. I want to be convinced by everything that I'm an idiot if I don't buy it. So for me personally, this is a stock that I would stay far away from, but it really does depend what type of trader you are, what your risk tolerance is, what your investment style is. It's not screaming at me that it's going to be compounding well over the next 10 years or the next 5 years. There's nothing signaling to me that it has to be worth more and it's going to have some serious beneficial product release in the near future. If you know some information that I don't, leave it down below in the comments. If there's some new drug that's super popular like Ozempic that they release, then of course this could be a serious turnaround, but we do have that possible value trap, and to me it just doesn't really look like something I'd want to be in. It's not my industry of expertise, and this is not really the stock that I would give much more than 5 minutes of my personal time to, because I have criteria that I look for and basically boxes that I want to check. So I want to see large funds buying it. I want to see whales interested in the company. I want to see high insider ownership. I want to see solid revenues, solid margins, and I want to see them up and to the right because that tells me that there's a wide moat. So I don't really want to be trading every week. I want to buy a stock, maybe average in once in a while, own it for 5 or 10 years, and then look back at a 10x over those 10 years or even better. So that's what I'm searching for. To me, ASRT does not look like it. But again, if you're an options trader, you embrace the volatility, you're comfortable with the risk tolerance, then of course it could work out for you. But with leverage, there's more risk involved, but that's not my personal style. But if you do like these type of videos, make sure to subscribe to the channel, leave a like if you haven't already, and I'll see you next time.